Hello and welcome to AI Market News by LM. Today, we're diving into a market that's, well, it's sending out some seriously mixed signals. We've got a really confusing US jobs report, some rising geopolitical tensions, and a few surprising spikes in commodities. So let's break it all down.
You know, if there's one word for today, it's probably uncertainty. I mean, from a head-scratching jobs report out of the US to some escalating risks around the globe, the market is just getting pulled in a bunch of different directions. So where does that actually leave us? Let's take a closer look.
So here's a quick snapshot of the global picture. Asian markets, they took a bit of a hit thanks to that weak US data. And that feeling kind of carried over to a mixed day on Wall Street. Now, what's interesting is the US dollar is holding its ground, but the real action is over in precious metals. We're seeing investors flock to gold and silver as a safe place to be. And oil is making a little bit of a comeback. We'll get into why in just a sec. Okay, so what's at the heart of all this uncertainty? Well, there are a few things going on. The main culprit, really, is the latest labor market report from the US. It's a pretty messy set of numbers that has pretty much everyone, including the Federal Reserve, scratching their heads. The November jobs report was a real head-scratcher. It was just filled with what economists like to call statistical noise. For example, the response rate to the survey they send out was unusually low, and that can really skew the results. It just made it tough for anyone to get a truly clear picture of what's happening in the US economy. The headline number that really jumped out at everybody was the unemployment rate, which shot all the way up to 4.6%. That is a 4-year high and a lot higher than most folks were expecting. Yikes. Now, you might think a number like that would send the market into a total tailspin, but that's not what happened. Investors pretty much just shrugged it off. So why? Well, it's because of all that statistical noise we were just talking about. Things like weird seasonal adjustments around the holidays and that low response rate. It just made the big headline numbers seem a lot less reliable than it normally is. So here's the bottom line. The market is looking right past all that noise, and it's seeing a labor market that is, finally, starting to cool off. And that is giving traders the confidence to bet on at least 2 interest rate cuts from the Fed next year. Now, the Fed's expected rate cuts are creating a major headache for other central banks around the world, especially the Bank of Japan. It's this classic case of 2 massive economies heading in totally opposite directions, and that's creating a whole lot of volatility in the currency markets. And this really highlights the dilemma, doesn't it? On one side, you have the US Fed, and they're looking to cut rates to help support a cooling economy. On the other side, the Bank of Japan is actually thinking about raising rates for the first time in years to fight its own economic battles. This tug of war is putting a ton of pressure on that dollar-yen exchange rate. And you know, this isn't just some abstract economic problem. A stronger yen directly squeezes the profits of Japan's biggest exporters, like their massive car companies. And as the head of the Auto Workers Union pointed out, that makes it a lot harder for these companies to give their workers the pay raises they need and deserve. All right, let's shift gears and talk about commodities. Over here, the story is less about central banks and more about geopolitics, and just the search for a safe place to park money in these uncertain times. You know the old saying, when the going gets tough, the tough get gold? We're seeing that play out right now, as investors are piling into these traditional safe haven assets. Gold is inching closer to its all-time high, but the real star of the show lately has been silver. It's been on an absolute tear. And what a ride it's been. Silver just rocketed to a new all-time high, hitting an incredible $66.27 per troy ounce. I mean, that's a powerful signal that there's a lot of fear bubbling just beneath the surface of the market. Over in the energy markets, geopolitics is back in the driver's seat. President Trump has ordered a blockade of Venezuelan oil tankers, which gave crude prices a little bit of a boost. But it's worth noting that Brent crude is still trading below that key $60 per barrel mark, and that suggests the market isn't too worried about a major supply disruption, at least not yet. So, with all these moving parts, what should we be watching for next? Let's take a quick look at the economic calendar and see what could trigger the next big market move.
As we look ahead, there are a couple of key events that really stand out, especially for anyone trying to guess what the Fed is going to do next. Referencing investing.com, we can see that today is all about Fed speak. We'll be listening really closely to speeches from Governor Waller and FOMC member Bostic for their take on that messy jobs report. But the real main event is tomorrow, the release of the CPI inflation data for November. That is the one that could really move the market.
And that's really what it all comes down to, isn't it?
The jobs report, it left us with more questions than answers. Tomorrow's inflation report is the market's next big test. Is it going to confirm this cooling trend and pave the way for those rate cuts, or is it going to throw another wrench in the works? We'll just have to wait and see.
And that's a wrap on a very eventful day in the markets. Thanks so much for watching. If you found this explainer helpful, be sure to like and subscribe for more. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.